And in the US, a national rail strike looms after a key union rejected a tentative agreement with freight owners. The IAM Labour group had agreed to a deal along with 9 other unions, but they're now withdrawing consent, raising questions over the consent of other unions. 2 further labour groups have yet to strike a deal. The US Labour Secretary is trying to broker a deal ahead of strike deadline due to take effect on Friday. Railroads carry some 40% of long-term shipments in the US, and a work stoppage could cripple many industries. Well, joining me now to discuss this story and the other business news of the day, including the latest in the battle for Twitter, is Rise correspondent Laurie Laird, who joins me once again from London. Thank you for staying with us, Laurie. Some dire European data. Are they as bad as they look?
They're pretty bad, Charles, but perhaps not quite as bad as the headline suggests. But industrial production down 2.3%. That's from one month to the next. It is really a massive, massive decline. And it shows you the effect that higher energy costs are having on European factories. The most energy intensive factories are really suffering. They've had to cut back on production, and that's probably going to stick with us for a bit. But there is a bit of an anomaly in these data. Irish industrial production fell by about 19%, and that's just a vagary with the Irish system. Irish exports are so reliant on the pharmaceutical industry. It's a chunky, volatile industry, so sometimes you see big shipments one month, big shipments the next month, and then an easing off the following month. So a fall in Ireland did contribute to some of this fall, but that doesn't obscure the fact that most of European industry is having a very difficult time right now.
And let's turn to Britain. Inflation easing, fuel prices declining. What do you make of all that?
It's a little bit like, and we've had so much economic data out of the UK this week, so much news out of the UK this week. And while it looks encouraging that inflation fell to an annual rate of 9.9% from 10.1%, all of that, Charles, is simply a fall in the price of petrol, motoring fuel, because crude oil fell a couple of months ago, and that ultimately feeds into the crude oil products that we use. I think the Bank of England will be very concerned about the appearance of inflation going through the wider economy. Food prices up about 12%. That's the highest we've seen since 2008. Rents, accessories, lots of things that people have to buy are rising in price. And so despite the fact that we've seen a fall in the headline rate of inflation, I think the Bank of England will be very worried that inflation is moving out of the energy sector and infecting the rest of the economy.
Let's turn to the United States, Laurie. Things were apparently looking better for President Joe Biden, but now he's facing a potential rail strike.
And this is a doozy. This is a huge one, Charles. Yeah, Joe Biden had a couple of victories. Inflation's starting to fall a little bit, but now we have the potential for a nationwide rail strike. Now, as you mentioned, 40% of long distance shipments go by rail. If the railroads were to shut down, we could see shortages of things immediately. I mean, within a couple of days. And of course, when you see shortages, you see prices go up. That can become inflationary. And the railroads were just getting back to normal. The whole U.S. logistics sector was just getting back to normal after all sorts of problems during the pandemic. But here's where things get even dicier for Joe Biden. Congress does have the power to prevent a strike. They can ban the railroad workers from striking. They can impose a settlement. Now, for that to happen, that would mean Joe Biden giving Congress its blessing to do that. Joe Biden, remember, campaigned on being a friend of the unions. He has been very vocal and encouraging non-unionized workforces, places like at Amazon, Starbucks, to start looking at collective action, looking at organized labor. So Joe Biden is in a very bad situation here. His Congress can prevent a strike and prevent inflation from rising further. Does he want to do that? Which is the least bad option?
Indeed. That's a bit of a quagmire there. But let's turn to a story that I wanted to talk about for a while. To buy or not to buy Twitter. The social media giant, of course, back in the headlines. What's the latest?
Yeah, most takeover battles, Charles, are about trying to buy a company. This is, call it a reverse takeover battle. This is Elon Musk trying to get out of buying Twitter, and this has been rumbling on and on. This will go to court on the 17th of October, but the betting right now, at least in the financial markets, is that there will be some sort of settlement ahead of this court action at the middle of next month. And in fact, yesterday when we saw share prices in the U.S. absolutely tumbling, Twitter was up a little bit, and that reflects the fact that hedge funds, people who have invested in this deal, think it will consummate in some way, albeit probably at a lower price than that 54.20 that Elon Musk initially presented. Market talk is somewhere around $50 a share. But there is some speculation, or call it fear, actually, Charles. What would Elon Musk do if this thing does go to court, if the judge forces the deal to go through, and Elon Musk simply ignored that court judgment? I mean, he has a very, let's say, iconoclastic reputation. He certainly follows his own rules in lots of ways, and there is a little bit of a fear that could happen. Elon Musk could be forced to, ordered by a judge to complete the deal, and he says, I'm not doing it.
Very interesting indeed. Let's turn, we've got about a minute and 15 seconds or so. So let's turn to the clothing retailer Zara, just reporting some staggeringly good results. Doesn't appear to be cost of living problems there.
Absolutely. This is a staggering set of results. It's actually the results for Inditex, which is the parent company of Zara and a couple of other clothing companies as well. But let's look at this. Profits up 41% to a record, but revenues are only up 25%. That means that despite a cost of living crisis, Zara is actually expanding its margins in quite a big magnitude. Absolutely shocking that during a cost of living crisis that this clothing retailer is doing so very well. One quick thing before I leave you, Charles, Zara also said that it's increasing its inventory, putting a lot of money into inventory. In fact, inventories were almost 50% higher at the end of July than they were a year ago. That suggests that they see supply chain problems coming forward. They mentioned the potential for supply chain problems, but didn't specify what they think those problems could be.
Thank you so much, Laurie. Absolutely prodigious reporting from you. Laurie Laird, our business correspondent, talking to me from London.